Hey everyone, I'm doing some research on two uranium companies, URG and UEC. How about we jump right in and take a look to see what they have to offer us. So, they're both American producers. Well, I should say, they're both located in America. One's producing, one is an explorer company. And they're both located in the same mountain region. So URG has been producing for 6 years. And then they've got some growth that they can have on top of it, which is funded and financed by revenues that they have from production. Both companies are low-cost producers. It's called the PseudoRecovery process, and I can go over the next slide of what that is. When they ramp up to production, URG can get to a 2 million pound run rate roughly, and United Energy Corporation can get to a 4 million pound run rate. The market cap of URG is 90 million and UEC is 190 million. And both of these guys, since they're American companies, would qualify if the government were to spend that money to build up their strategic reserves. Both of these companies would qualify for that. And I don't think there's really any other companies that are producing uranium in America. So these, I think, are both excellent propositions. So in PseudoRecovery, it looks like this. Basically, you've got a production well, which is in the middle, and they inject water on the outside and push it all through the production well to the processing plant. Then they've got monitoring wells on both sides. And that's all it really is. So you're injecting water in, pushing water and uranium out through that production well, and then you've got the processing plant that splits it all up. So URG, we'll start with them first. They've got production. This is directly pulled from their website. So it looks like this is previous, March 2011, 12, and so on. This is kind of their growth profile of the Lost Creek. And they've grew it 250% from 2011 to 2016. But that's kind of what their growth profile looks like before. And this is what it looks like going forward. This is their production possibility. So they've got the Lost Creek production here. That's what we were looking at the slide before. They can kind of get a little bit more out of that. Then they've got a Shirley Basin production that will be coming. And then they have another project called Lost Soldier. And you can see this ramping profile is pretty good because at the same time, overall in the uranium production profile for the world, it really starts ramping down over here. So when everything's ramping down, this company is ramping up production. So that's pretty good. So URG looks pretty good to ramp their production from their existing production and from new projects coming up, and can be funded from the revenue of their production, current production. That's what they say on their website. For UEC, this is really just projects. So there's no production today, at least according to their website. And the uranium areas, they've got 3 areas, one in Texas, one on the corner, I think it's in, Texas, like New Mexico, Arizona, I think it's actually in Arizona, and one in Wyoming. Those are the uranium, and they also have a vanadium production, and there was a titanium oxide one that I saw. But we're looking at uranium. So these are the projects that they have. And they have a processing plant that's capable of 2 million pounds a year. Located in Texas. So that's all the information that I had in detail for UEC. Now, what I like to see as an investor, and one of my pet peeves is, I hate getting diluted in companies. And what that means is, share dilution is when a company can't fund themselves from production, from it could be low prices, they're producing and they're losing money, or they just aren't producing and they continue to dilute the shares of the company. So I've got a slide here that shows some of the companies and share dilution. Now, this is since 2011. I grabbed this from the URG webpage, and I think it's kind of cool, and I do think it's an advantage for them. But their share dilution is 55%. UEC, since they're not producing, they're probably going to have to float more shares or borrow more money to fund the growth of that company and their projects. They're at 161, but when you start getting up here, I mean, they're diluting the hell out of you. So UU is probably not going to be a large holding of mine. I want to be sticking with ones that are not diluting their shareholders, especially down here. And obviously we're going through some rough times. So with the uranium price so low. So I think UEC and URE are, well, it's URG, I think, are both very good companies to go into that are American producers if they pass that bill to grow their production strategic reserve or uranium strategic reserves in America. I think these two companies are going to benefit from that, obviously, because they're American producers, and there's other American producers, really. So those two I would recommend to do further research into. This is the research that I've done kind of off the top from both financial, the presentations that they have on their websites. And I don't really like getting too much other information from other websites because you start going through opinions, and I just like to hear it directly from the company. So yeah, this is finding value. Hopefully this is giving you a little bit better insight on URG and UEC. Thanks for your time. Subscribe and comment.